Builders and home sellers alike are absolutely throwing money at Austin area home buyers, which has presented a very unique opportunity for you to get creative with what this money can do for you. Hi, my name is Jordan Brown. I'm your Austin area realtor, and I help people just like you every single week move to the Austin, Texas area. Now, in today's video, I'm going to be teaching you the three main ways that I see my buyers utilizing seller concessions. This is money that the builders or home sellers are offering you to use how you want in order to accomplish a certain goal. They're all different, so make sure that you tune in and watch until the end to see which scenario is going to best suit your strategy. Option number one is going to be a permanent rate buy down. It's no secret, interest rates are not ideal right now, or at least not in the eyes of many buyers. However, if you are still in the market, you can ask for the sellers to pay for your rate to get bought down. Now, this is not going to be on the extreme side like you see with builders who are offering super competitive rates. I've seen some as low as 3.99%, more commonly 4.99 to 5.99. Let's just say your market rate right now is 7%. You can then ask the seller to pay up to a certain amount of concessions that's going to allow you to buy down your rate on a permanent basis. This means that it's not a temporary buy down. They're permanently getting your rate down from 7% down to whatever it can be afforded to do. You'll want to talk to a lender as far as what this looks like. However, just a general rule of thumb, every 1/4% costs about 1% of the purchase value. So let's just say we're working with a $400,000 home. So 1% of that is $4,000. So by getting the seller to pay $4,000, I'm going to then have the lender buy your rate down roughly 1/4%. So instead of a 7% interest rate, it's going to get bought down to 6 3/4. One thing you have to keep in mind as you're listening to these different options and how they can possibly fit into your plans, you have to remember that there are certain maximums depending on your loan type, the property type, your down payment that are going to determine maximum amounts of seller concessions that you can ask for. Many people think, oh, well, I can just ask for $100,000 in concessions. Really, that's going to depend on what kind of home you're looking at purchasing. You would have to be buying a very expensive home to get $100,000 in concessions. But it's important to know that going into it so that you don't ask for more than you legally can get. So the people that are going this particular route are people that want that permanent interest rate. Maybe you don't want to rely on rates ever coming down in order to have an affordable payment. Here recently, I helped a single mom who bought a home and she wanted to have a set payment. She wanted there to be no variation. And so we were able to get her a payment that she was comfortable with. So we were able to get the seller to pay her rate down to a certain point that made her monthly payments something that she could manage and that she was happy with. This particular client did not want to rely on, well, I'll just eat the payments now in hopes that in 1, 2, 3 years rates become more affordable and then I'll refinance. So that is the kind of person that would want to take advantage of this option. Now let's talk about option number 2, which is a temporary buy down. Unlike the first option, this option is temporary, meaning that I'm going to get the seller to prepay a certain amount of interest on your behalf, which is going to lower your payments for an agreed upon amount of time. Now, the most common that I see here are going to be 2-1 buy downs or 3-2-1 buy downs. But Jordan, what the heck does that mean? So a 2-1 buy down means that, let's say market rate is 7%. I'm going to get them being the sellers to pay down your interest 2% for year 1. That means for all of year 1, your payments are being made as if your interest rate was 5%. Then in year 2, it's going to go up 1%. In year 2, your payments are as if your interest rate was 6%. Then in years 3 through 30, you're paying at your market rate, which was 7%. So you can see that this is going to afford you 2 years of a discounted rate. And the people that want to take advantage of this are people who are optimistic that the rates are going to lower below, I don't know, maybe 6 or 5% within that amount of time. In a similar fashion, a 3-2-1 buy down is buying down the interest rate in year 1, 3%. So in our example of a 7% market rate, year one, you're being treated as if your loan is at 4% interest. Then in years 2, you're at 5%. In years 3, you're at 6% before returning in years 4 through 30 to the market rate of 7%. This buys you even more time in order for rates to become favorable for you to do a permanent refinance. As a general rule of thumb, the amount that this is going to cost is going to be for a 2-1 buy down. It's roughly about 2.4% of the purchase price. And on the 3-2-1 buy down, it's about 3.4%. As I mentioned earlier, you're going to want to confirm these details with your lender for a more accurate amount on what it's going to take to get these buy downs done. They do vary by home, so make sure you're talking with a local lender to get this going. But again, general rule of thumb, just to get you an idea, and keeping in mind that you have limits on how much you can ask for. Before I get into this third and final option of how you can utilize seller concessions to accomplish your specific goals for a property, I want to let you know I do send out a monthly newsletter on the first of every single month. It's jam-packed with Austin, Texas events. I've got discounts for various businesses in there. And of course, I'm going to keep you updated with all the pertinent Austin housing market information. If that's something you're interested in receiving once per month, you can sign up down in the description below. There's a spot to click the link to sign up for my newsletter. Without further ado, let's get back into it. So the first two options have to do with buying your interest rate down, either on a permanent or a temporary basis. This one has nothing to do with your interest rate. This is going to be to have your concessions cover your closing costs. This is the amount of money other than your down payment that you're bringing to the table. Think of your closing costs as your lender fees, your title fees, your prepaids, and your prorated charges. A lot of home buyers don't know that. Your down payment and your closing costs are two completely different things. So Jordan, how do I figure out how much my closing costs are going to be? Great question. I'm glad you asked. All we got to do is pair you up with a local lender. We pick the property that we're talking about. We tell them how much we're going to put down. We let them know about what the HOA fee is. We let them know the tax rate, and they're going to work up an estimate for us and then say, based on what you've told me, this is the amount that I think you're coming to the closing table with. We in turn put that into the offer and request that the seller pay up to that amount for us. This particular option is for someone who is not concerned about the interest rate for one reason or another. You are more concerned about how much cash it's going to take to come to the closing table with in order to acquire this property. So if monthly payment is no issue for you, but you want to get the seller to help get you into the home, this third option of having the concessions pay for your closing costs is the one I'd recommend. So in review, you have a permanent rate buy down, which is going to take the market rate, buy it down on a permanent basis from year one. Then you have a temporary buy down option, most commonly in a 2-1 or a 3-2-1 buy down, which temporarily lowers your interest rate. And depending on which option you went with, is going to lower it either 3, 2, or 1% in their respective years. That particular option is fantastic if you plan on refinancing the home. And lastly, you can get your closing costs taken care of, meaning that all you have to bring to the closing table is your down payment. If you need any help getting connected to some fantastic local lenders here in the Austin, Texas area, I want to be a resource for you. My contact information is down in the description below, and I'd love to help represent you if you're looking for a realtor that cares and is knowledgeable and selling in this market. I've seen a variety of different goals and different scenarios, and we've been able to navigate that to accomplish whatever it is that you're looking to do. And I want that chance to earn your business. Thank you so much for watching. If you enjoyed the video, make sure to give it a like. It's a free, easy way to support my channel. Subscribe if you want to stay up to date with all my Austin area real estate content, including market updates, home tours, and more. I thank you so much for watching, and I'll catch you in the next one.